In this video, I'll reveal all my passive income for February, from both share dividends and premium bond prizes, and if you stay to the end, I'll discuss everything I've been buying and selling. For the past 15 years, I've been drip feeding spare money each month into mainly large cap UK companies who pay reliable dividends. I reinvest the dividends and allow them to compound over time. I also make good use of a stocks and shares ISA so that the dividends I receive are tax-free. At some point in the future I'll be using this passive income to live off, but in the meantime I'm going to carry on letting it grow. Before we begin, I'm going to go back in time to February of 2009, the year it all started. February tends to be one of the worst for dividend payments, and for the first 4 Februaries I received no dividends at all. Then finally in February of 2013, I received a dividend of £33 from United Utilities. As the years went by, I added more companies to the portfolio and my dividend income slowly grew. Let's return to February of 2024 to see where we are today. This is not financial advice and I'm simply showing you my own journey. On the 1st of February, I received a present from United Utilities. This company is the UK's largest listed water company, supplying its services to more than 7 million people. The shares are down a touch this year. They pay a decent dividend of 4.6% spread over 2 payments a year. Dividend history is very respectable, and the company has been able to raise its dividend consistently for well over a decade. This month, United Utilities paid out a total of £125. Also on the 1st, it was the turn of British American Tobacco to pay out. This multinational company is the largest tobacco company in the world based on net sales. At the time of this video, the share price is almost unchanged this year. Dividends are paid quarterly and the yield is a huge 9.9%. As you can see here, dividend growth over the long term is very good. This month, British American Tobacco paid out a total of £220. If you want to get the ball rolling on your own investing journey, then Trading 212 will give you a free share of up to £100 to help you get started. Just click on the link in the video description. On the 29th of February, I received some cash from Greencoat Wind Energy. This company specialises in renewable energy. Their wind turbines generate electricity, which makes money. Some of the money is handed back to shareholders in the form of a dividend, and some is used to acquire more turbines to generate even more money, and the cycle repeats. The shares have not had a great start to the year, however, down nearly 8%. You can see on this graph, since the middle of February, there has been a bit of an upward trend. This is another company which pays dividends 4 times a year. The yield is high at 7.2%. As you can see here, the dividend growth has shown an upward trend since the company was formed in 2013. This month, Greencoat Wind Energy paid out a total of £185. If you're enjoying this content so far, then please hit the like button, and why not subscribe to follow the journey. And now for premium bonds. The prize rate for March is falling from 4.65% to 4.4%. There is one draw a month, you have easy access to your money, and there is a chance to win £1 million each month, and all winnings are tax-free. This month I managed to win a prize total of £100. With £50,000 invested and with average luck, I would expect to have won £375 so far this year, but I've actually won only £200 over the last 2 months of the year. It will be interesting to see how this progresses for the rest of the year. Throughout 2023 I did very well. The expected return with the full amount invested was £1,900 for the year, but I actually won £3,075 over the whole of 2023. The expected rate of return for the year was 3.8%, but I actually managed 6.15%. I certainly don't expect to achieve this every year. I use premium bonds as my emergency fund, so I hopefully never have to sell my shares and can allow them to compound over time. Any prizes are of course tax-free. I have the full allowance of £50,000 as mentioned earlier, the prize rate is currently 4.4%. This is the average prize rate, so the more you have invested, the closer you will get to this value. At this price rate, my expected return would be £2,200 a year. There is no tax to pay at all, so my net return would be the same. Now, what if I kept £50,000 in a savings account paying 4.4% interest, and I was a basic rate taxpayer? I wouldn't have to pay anything on the first £1,000 of interest, but anything above this would be taxed at 20%, leaving a tax bill of £240 and a net return of £1,960. If I was a higher rate taxpayer, only the first £500 is tax-free, and the rest is taxed at 40%, giving me a tax bill of £680. And a net return of £1,520. For additional rate taxpayers, it gets even worse, as you don't have any tax allowance at all. All your interest would be taxed at 45%, leaving a tax bill of £990 and a net return of only £1,210. So when we take tax into account, what interest rate would you currently need in order to beat premium bonds with £50,000 invested? If you are a basic rate taxpayer, a bank interest rate of 5.1% would on average beat premium bonds. For a higher rate taxpayer, you would need to find a rate of 6.7%. Additional rate taxpayers would need to find an interest rate of 8.1% when tax is taken into account. So for some investors, maxing out on premium bonds might be a good idea. There is always the entertainment aspect of the monthly premium bond draw that has an added appeal. Now for my passive income summary. The green bars on this graph show my passive income from the first 2 months of last year, and the blue bars are for this year. I find it so motivating seeing the dividends rise like this. It makes me want to add as much money in as I can afford, just to see it grow. This graph shows how my average monthly dividends has changed since I started the journey. This is just dividends and does not include premium bonds. Remember, I don't spend the dividends, I put them straight back to work to allow them to compound at a faster rate. At the time of this video, I'm generating an average of £1,257 a month in dividends, and it's all tax-free. I'll shortly be revealing what I've been buying this month, but first a quick look at the FTSE 100 ex-dividend dates for the month ahead. 13 companies go ex-dividend in March. If you hold the shares before this date, then you are entitled to the dividend, which will be paid to you on a payment date. As an example, I own shares in Haleon, which goes ex-div on the 14th of March. I will be entitled to 4.2 pence for every share held, and this will be paid to me on the 16th of May. Here are all the payment dates for March, and I'll be expecting payments from SSE, Unilever, Shell, AstraZeneca, Imperial Brands and BP. This screen shows the highest yields in the FTSE 100, with Vodafone leading the way at nearly 11%. With very high yields, there is often an increased risk of a dividend cut, something which recently happened to Rio Tinto. When this happens, investors sometimes worry, which can cause a share price fall. The average yield of the FTSE 100 is 3.8%. My own portfolio actually has a lower yield of 3.5%. So I'm expecting some share price growth as well as dividends over the long term. The dividend yield I'm receiving on the amount of money invested, or yield on cost, is 5.9%. So what have I been buying this month? Firstly, I've continued to buy more shares in Diageo. They have had a bump in the road recently with falling sales in Latin America, but I'm confident of a bounce back and have been loading up on the shares while they are cheap. Dividend growth looks very impressive, with Diageo able to raise the dividend year after year, usually a very good sign indeed. I've continued to buy more shares in RELX. The company supplies information and analytical solutions to a whole variety of businesses. The share price growth over the last 12 months looks impressive, and I hope to buy into this momentum. Dividend history is excellent, and just like Diageo, the company is able to consistently raise its dividend. I've also continued to add to my S&P 500 ETF. The one I use has the ticker code IUSA, and here are the largest US companies which you would have exposure to. The ongoing charges are very small at 0.07%. Dividends are around 1.4% spread over 4 payments a year. When I fill my stocks and shares ISA, I can buy this ETF outside, and as long as I keep my non-ISA dividends below the non-ISA allowance, there is still no tax to pay. This may become more difficult in future, but I'm okay for the time being. For more on UK investing tax, then click here. To find out which stocks and shares ISA platform is the best one for you, then click this video here. See you soon and happy investing.